All right, an overlooked stock winner in the tech category this week that deserves some attention, Ciena. George Tsilis is looking at the business for us. George, set us up with the basics. What do they do, and how come they haven't gotten as much credit? Because aren't they like data infrastructure connected too?
Yeah, they are, and that's the thing. You're right. You look at Ciena, you have to think about some of their mainstay competitors in the optical networking and optical digital transport business. So some of the mainstay legacy players out there include Cisco Systems and Aristanet, ANET, Juniper, which was recently purchased or is in the process of being completed purchase from Hewlett Packard Enterprises. So this is a much smaller player relative to some of those behemoths out there, but nonetheless, it's been playing catch up when it comes to the sales and the AI infrastructure space, as well as in their optical network gear, because we talk about the hardware focused most on the NVIDIA's 3D accelerator chips and the data centers, but no one really speaks about the transmission mechanism of the results of that data crunching, and that's essentially the transmission lines and the optical networking lines that companies like Ciena and Aristanet supply the marketplace. So this company it's a legacy player. It's been around for quite some time. I believe it's actually been one of these names I remember from the .com era that survived that bear market. But nonetheless, there's been huge demand, obviously, from the network build-outs, and this company's been benefiting. They did report on yesterday morning, and I think it was maybe overlooked, but the price action earlier in the morning when the report was down, but it just opened higher and it gapped and it continued to the upside, even though when you look at the report, from the surface, they actually missed on earnings, but did beat the sales just fractionally. But the guidance and the constitution of the guidance is really why we're seeing a gap in go, or a gap in continuation, because they denoted that about 30% of their sales in the next year, the fiscal year 2025, is going to be AI hyperscale sold to hyperscales. The other thing, they also denoted their managed fiber optic network base, that's their core business, is expected to increase to 10% of total sales. And they actually see these double-digit gains going through for the next 3 years. So they get actually some 3-year guidance. So it looks like there's high demand for their product, at least the visibility they're providing the marketplace over the next few years. And so hence, even though the price has moved, about 25% in a couple days, some of the analysts are still constructively bullish, like Bank of America. And of course, you look at Barclays, they actually have a 97 target, but also Bank of America's got a $95 price target on the name as well.
It's almost like it's about a tenth of the size of, and
yes,
more even a bigger fraction of Cisco, but significantly smaller than a few of those others. So it's kind of like a mid-cap, a boutique version. But does that put them at any competitive risk, George? Because it seems like the market was taken surprised by their earnings, like maybe they didn't think they were going to be able to get as many sales as they did.
Yeah, that's a good point to bring up. I think that's what happened in this case is that there was underestimated expectations for Ciena's market share in the hyperscale AI space, and I think that's now being recalibrated or reevaluated based on what the company's provided in terms of guidance. So I think it was really that 3-year guidance that they provided, and the other thing is the share buybacks. They did talk about a share buyback of about $330 million. Relative to about $12.5 billion, I mean, that's a few percent. So, that also adds to what we're seeing in terms of the magnitude. Now, if you look at the sales, the rate of change in sales for the next year, so 25 versus 2026, it's 10% now. And that's what they guided higher for. But the earnings growth estimates between 2025 and 2026 are around 25% increase. So for what it's worth, right now, even after today's move, is trading around 1 times, next year's earnings growth. So, it could trade to 1.5 times that number, or it may just stay around 1 times. And so, therefore, that's why I think if you look at the analysts, at least the two that were bullish today, they've got essentially a price target that's relatively close about $95 to $97 relative to close to $90 it closed at today. That's their target. So I think that's, they're setting some expectations that are relatively modest relative to the company being able to trade at a little bit higher premium to growth because of the forecasted business sales that the company provided after the earnings.
Okay. All right. Well, it looks like it's a pretty good surprise. And I see that obviously some of their other businesses are slower, but that's kind of par for the course in this category right now where the older devices just aren't as big a demand. People want to spend on everything else. So, there's going to be a division within the balance sheet on which side of that coin you're on. And it looks like they've got more stuff on the right side. So we'll watch it more clearly and closely. Thanks, George.